Hi, this is R Sundar. Welcome to this special episode. I am going to talk about HDFC and HDFC Bank Merger. Title says it's too big to merge. So in 2007 or 2008, when the Lehman Brothers collapse came, so this new word came, too big to fail. So the same way now, HDFC and HDFC Bank merger is a too big to merge. And ever since HDFC and HDFC Bank merger news came, and markets are going all over the places, and HDFC and HDFC Bank both made a huge swing. And last year, if you remember, HDFC went from 2,200 to 3,000, again from 3,000 to 2,200, and huge volatility. Why? Because there are a lot of issues in merger, and these are not small companies. One example I give you. If HDFC is being merged with HDFC Bank, so at some point of time, what they will do, they will make HDFC weightage in Nifty to 0. So HDFC weightage will be going to 0. I think roughly now HDFC has about 5% weightage. That weightage will be reduced to 0. And then what happened? That 5% weightage will be distributed to remaining 49 stocks. And after the merger is over, right now I think HDFC Bank has about 8% weightage, or I think 9% weightage. So if the HDFC Bank has 9% weightage and HDFC has 5% weightage, after the merger is complete, so HDFC Bank will be given a weightage of 14%, which means that temporarily for some time the 5% weightage will be taken away from HDFC but will not be given to HDFC Bank, will be distributed to 49 other stocks, and then once the merger is over, that 5% will be taken away from the remaining 49 stocks and will be given to HDFC Bank. Now, what is the problem? The problem is that there are many mutual funds, index funds, so they are holding the HDFC shares. And tomorrow, their weightage is reduced to 0, they have to sell all the shares. And they have to sell all the shares and then they have to buy the remaining 49 stocks. Now, after the merger is complete, the weightage for HDFC Bank will be increased. Again, they have to buy HDFC Bank. Buying HDFC Bank is equivalent to HDFC buy only. But the problem is that now you sell in HDFC, maybe after 1 month you buy HDFC Bank, so the price risk is always there. The price may be higher or lower, so that risk is a very big risk. Normally, a smaller companies merging, so this is not a big issue. But this is the first time, if I am not wrong, two companies from Nifty 50 stocks is being merged. And even if there was some merger, I am not very sure, but both these stocks are among the top 10 index heavyweights in India. So that is why all this commotion came. And later I heard that, so the exemption was given for this rule of bringing the market cap to 0. So, because HDFC and HDFC Bank is too big to merge, so there are a lot of, exemptions, waivers have to be, considered by the government. And I think that they are doing. I think today morning also I saw some SEBI relaxing some rules for HDFC Bank warrant issue or something like that. I'm yet to get the details. I just saw on the business channel. So lot of things have to work, uncertainties. Okay, now what is the very big issue? If there is a mutual fund and holding some money, let us say 100 crore is the total AUM, asset under management, total. They cannot invest more than 10% of their money in one particular company. Assume that I have 100 crore AUM. Probably I might have invested about 8 crore in HDFC Bank and 8 crore in HDFC. So total 16 crore. Now when both are merged, they become one single entity, but out of my 100 crore, 16 crore is invested in one company, which is against the rule. So I have to bring that to below 10 crore. So which means that I will have to sell 6 crore worth of shares. So this fear has come into the stock market, and that is why both HDFC and HDFC Bank has been hugely underperforming. In fact, after the coronavirus, and most of the stocks have shot up like anything, but in the last 3 years, if there is any one group which has been hugely underperforming, that is HDFC Group. HDFC Asset Management Company, I think there was some block deal also, I think 1 or 2 days before, and that has given zero return in last 3 years. And HDFC Group is considered to be a very good group, growing at the rate of 20% on an average every year, but still that gave negative return. So now there are roughly about 44-45 mutual funds holding shares worth more than 10% of their corpus. That is one thing. Second thing, the total excess. That means if they have to sell some shares to bring their holding below 10%, then how much collectively they have to sell? That works out to be around 8,000 crore. But consider the buoyancy in our market. Our markets are bullish, and considering these two companies, both are index heavyweights, 2 among the top 10 index heavyweights, and then 8,000 crore selling, I don't think that should impact the price. And just I checked for the last 1 or 2 days, the delivery volume is already more than 1,000 crore. So in these stocks, HDFC and HDFC Bank put together. So that's a question of 8 days of selling. So I think the merger will be complete by the end of next month. I think on July 20, the new entity is being listed. And then even after that, so there is another 1 month time is given for all these mutual funds to reduce their stake below 10%. In some extraordinary cases, the SEBI has allowed even another 1 month, of course, with a permission. So these mutual funds have almost 3 months time from now to pare their stake. And another thing, say for example, HDFC mutual fund or ICICI mutual fund or any other mutual fund, so they may be having not only one mutual fund, but they may be having so many schemes, so many mutual funds. One large cap fund, the other one may be multi-cap fund. So in multi-cap fund, they are allowed to buy. So what they can do, they can shift from one fund to another fund without disturbing the market price. So that is also possible. So therefore, this 8,000 crore selling in HDFC and HDFC Bank, I don't think that's a very, very big concern, but the markets have been underperforming. The HDFC Group shares have been underperforming for the last 3 years. Usually, if a group underperforms for a very, very long time, the possibility of outperformance for the next few years is very, very high. So I still feel that, next 3 years, the HDFC Group may be outperforming. So I may be wrong, and please note that I am not a SEBI registered analyst. This is just my personal view. So let us see how this merger happens and how post merger, whether there will be any rally in these stocks. Hope you enjoyed watching this video. Thank you for watching.